Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event.
Hello and welcome to today's Earmark webinar. 6 crucial Shopify insights for e-commerce CFOs and accountants. I'm Joel from the Earmark team. If you have any questions, please put them in the comments section and we will address those. And with that, I will pass it over to our host for today's Earmark webinar, Dawn Brolin.
Awesome. Thank you, Joel. Very excited, per usual, folks. Always excited to present some information today, of course, talking about e-commerce and how sometimes the complicated accounting that we are trying to solve for. So very excited about today's presentation. For those of you who do not know me, my name is Dawn Brolin. I am the designated motivator for accounting professionals. And my goal is to help you and your firm improve your processes and make your life better. Keeping it simple, right? I am a CPA and a certified fraud examiner out of Windham, Connecticut, the CEO of Powerful Accounting, Inc. I do a lot of speaking and education, been doing it for over 20 years now. The president of the Accounting Cornerstone Foundation, which is a foundation that supports sending people to in-person learning, something that I'm very, very passionate about as I've found my tribe at conferences. So we've been really excited in our second year of doing that. Again, very, very excited about that. So glad for you to be here today. Glad for you to be here because today we're going to talk about why e-commerce accounting can be so challenging. We know that these apps say that they directly connect to our accounting system, but they don't always tell us that it doesn't always come over correctly. And we as accounting professionals want it to be correct. So here are some major things that we want to watch out for in Shopify. And we're going to talk through all of these topics today. We're talking about revenue recognition implications and choices. So we know we want to make sure that revenue recognition is smooth so that when we are meeting with clients, we have timely reports that are accurate. Imagine that. Accurate accounting, AA. Features that your staff may need training on. So sometimes we take for granted that we're going to, okay, our clients just set up Shopify. Now all we have to do is connect it to our accounting system and voila, no need for the bookkeeper to handle all of that. That's not always the truth. So we want to make sure we know when there are cases in which we need to train our staff as we are working with these various e-commerce platforms. We're going to talk about protecting margins when influencer gifting occurs. So think about influencer gifting, somebody that wears a shirt for a company or does those types of things. Think about how we're going to protect those margins when we're dealing with those types of gifting. We're going to talk about avoiding overpayment of sales tax. Now, I don't know about you, but I don't like giving the government any money. Never mind any kind of overpayment on sales tax. It's funny. I see some of those memes out in social media where it's like, we pay income tax, sales tax, tax on the sales tax, all these taxes, property taxes, tax. I feel like that's, for the most part, what we work for. So we want to certainly avoid those underpayment of sales tax. And we'll go through some of that. And then we'll talk about understanding and unpacking the Shopify deposits, which at the end of the day, I think you're going to be surprised by some of the things that we unveil today that you may not be aware of and may not have been aware of. And I would just say as a caveat, if you are someone who has been working with Shopify and there have been errors and issues with syncing and all of those things, we're here to solve that for you today. And also give yourself a little bit of grace if you're someone who has been working with various e-commerce platforms and the accounting just is so cumbersome. Understand that we get it. That's what we're here for today, to hopefully unravel some of those mysteries about how things should be working and things should be happening with this type of a platform. So now, as we know, Shopify is awesome, right? We love all of these ways and opportunities for our clients to be able to sell their products and services, but primarily products, right? We're talking about inventory in a lot of cases when we talk about e-commerce platforms. And many sellers use Shopify specifically because it's awesome. It's got all the features they offer, a brand with the right product and marketing mix that can help them scale really, really fast. And that's awesome because, as we know, as the accountants, we're the advisors helping our clients, obviously, hopefully, being successful. So we know that people are going to choose Shopify. It's a very popular app for people to use. Now, this means that they may grow to be a target for acquisition. So think about acquisition situations where we want to make sure, what if they want to go public? Different things like that. They have all the money to pay your fees. Imagine that. And they need all kinds of advisory. These are awesome clients. These are the ideal clients that some of us are looking for. Some people, they niche, however you want to say that word, but they're looking to say, hey, listen, I really want to work with e-commerce clients. And if you're going to do that, you got to make sure you understand those platforms inside and out. And they are not easy on the accounting side. On the marketing and sales side, fantastic. Okay. But with all the things going on in a Shopify seller account, and we're going to cover some of these in today's presentation for sure, you as the accounting professional need to be on your toes. Okay. And certainly understanding, as we're advising and helping our clients understand what we're dealing with here. This is not just, oh, Shopify is easy to use, so I'm going to sell. That's great, but it's not as easy on the accounting side. And so we know this isn't going to get easier, folks, by the way, because Shopify keeps adding features, and as they should. Like, hey, I get that, and we want them to keep adding features to help their customers sell more. We want our clients to be successful. We want them to generate revenue, right? Because without revenue, ain't nothing going on. They're not going to stop development just because it makes it hard for the accounting teams. Like, they aren't thinking of us, folks. They're thinking of their commissions. They're thinking of the sales, and that's okay. So here's where we have to step in, right? The Shopify reports at the end of the day were not designed to meet the needs of the accounting pros. So those reports are not accounting friendly, if that's fair. So with us and the move to advisory, this poses a couple of major problems for us. Okay, the fact that these reports are just not what we need. We need more. We need better. We have to update the financials on a regular basis. But getting the data into the accounting system, so far, if you were doing it, is likely a manual process and takes a lot of time. Or even if you're syncing in some capacity directly to Shopify, it's still not working right. Okay. Trying to generate those journal entries. Like, I see people still doing payroll journal entries. Like, what are you doing? Every payroll system should and likely does integrate with an accounting system. I think that sometimes we get stuck in the rut of how we've always done it. Okay. So journal entries are great. And that's, something we've been doing for years, but there are better ways, more efficient ways, more accurate ways, taking that human error out of the picture. And so what I'm going to do is I'm going to show you how we at Powerful Accounting get all this done. We got all done without pulling our hair out, right? By the end of this presentation, you're going to see some of the tips and some of the ways that you have to be, things you have to be aware of, to be honest. But for now, we're going to move on to the things that can seriously hurt you and or your clients. These are kind of like warnings for you, right? At the end of the day, because you may not be aware of them. And at the end of the day, when your business or a client you're trying to serve and they're using Shopify, these are things you absolutely have to know and have to understand. Okay. So that's what we're going to kind of walk through here. So what are those 6 things to watch out for? Now, as we said in the beginning here, this is not a polling question, but I really kind of want to hear from you. So those of you who are here today, how confident are you that you're accounting for Shopify transactions correctly? This is just me. I want to understand a little bit about who I have here today and who the heck am I actually talking to? So how confident are you? Are you extremely confident in the way you're accounting for Shopify transactions? Are you just confident? Not confident at all? I see some of that. Yes, Lori. Oh, Lori. I love you, Lori. Okay, so not confident at all. Can it be done correctly? Are you even sort of confident? Just put that in there, how you really feel. So, and yes, absolutely. The learning curve can be tough. And that's what we're hoping today, that we can point out some of those, I'll say, things behind the scenes that you may not realize that that Shopify is doing behind the scenes. So I see some people are confident. Great. That's awesome. I love that. For those of you who are just diligent, some of you are just getting started with maybe a Shopify client and trying to maneuver it and make sure that it's right. And like I said before, the big warning for me as an accounting professional is in the event that this particular client takes off, they're bringing in multi-millions of dollars in revenue for the products that they're selling. Now, all of a sudden, they want to be acquired, and I'm still not confident on the accounting. That's for me, that keeps me up at night. And I like to sleep. I don't know about you guys. I really am, sleeping is important to me. So again, just audience check-in, just wanted to see what you guys thought. Looks like we're kind of a little mixed bag. We have some confident people, we have some not confident at all, and that's okay. We're all here to learn together. So that's awesome. All right. So here we go. Let's talk about revenue recognition. Now, we talked about the reports. The Shopify financial summary data is based on order date. Now, this is really important. It's based on the order date, and it shows the value of goods in the sale regardless of when they are shipped. So some of you may not have known that. When is revenue recognized? Okay. Again, as we're trying to think through this, one of the first things to understand about that Shopify summary financial report is that it's based on when the order is placed. That's important to know. If you didn't know that before, you know it now. And this might be fine for some companies at the end of the day. It might be fine for them, people that ship the same day. So if the order is placed, the shipment is made, or maybe the day after, even like we're in a short time period, maybe a 24-hour time period, the order's placed and payments received. So that's just fine. Those are things you shouldn't be like shocked about. But for those clients that you have who are selling products that they're shipping maybe 3 days, 4 days, 5 days, a week later, a month later, now it's complicated. So when you're dealing with those kind of clients, the impact to revenues can be extreme. And here's why. Think about a furniture company. So let's say we have a furniture company who takes the order and payment, let's make up a date, November, sometime in November. So a lot of people like to buy furniture during the holidays. That's what I'm going to say. It doesn't ship until February, which has been an issue since COVID, I have to say. Furniture shipping has taken a lot more time than it used to in the past. So not only are you crossing maybe weeks or months, now you're crossing fiscal years. So essentially the Shopify revenue will be incorrectly stated each month because it's being booked pretty much on a cash basis. Well, close enough to a cash basis anyway, because even though you might not get the payment for each day's sale, right? That happens for a couple of days, whether it's a credit card delay or whatever the case may be, a merchant processing issue. It's okay if you also ship that day or within a couple days, but it's not okay if there's a delay in shipping. Because at the end of in this particular example with furniture, it can lead to the company not passing an audit. This may be, a really large company who requires an audit every year. That's very possible. Or having their valuation, let's say they're ready to sell, having their valuation reduced in the process of being acquired by another company. So maybe they're undervaluing their company because the revenue recognition is not being done properly because Shopify is recognizing the revenue right away when the order is placed, but the cash has not been received till later. So we have to keep our eye on cash flow. Is a whole nother conversation to think if you think about it. So companies who are going to go public or be acquired should take the steps, most importantly, to move the proper revenue recognition for their Shopify sales now. So they've got to move it now in order to give the truest picture of their revenues. And again, as we're advisors working with clients, we also understand that we need to be having timely financials and accurate financials to make sure that they're right. Now, of course, you could try and just book all revenue into deferred revenue. That's an accounting method, right? Is to make that journal entry, if you will, move all the revenue into deferred revenue and then move it into revenue when the product is actually shipped. But if you're talking about massive amounts of sales, you're going to drive yourself crazy. If the volume is more than a few items per month, you just have to automate it, folks. And so that's where we run into those issues because, again, e-commerce platforms, they're not setting it up for success for the accounting side. They're setting it up for success for the sales side, for the clients. And we understand that. So that's one of the biggest insights for you when it comes to Shopify and how they are recognizing revenue. Again, we've got to really be focused on this. Okay. So special watch out for sellers who use both Amazon and Shopify. So this one's big. Okay. So think about companies that sell on both platforms. right? Amazon reports revenue only when the order is fulfilled, so when the product is shipped. The opposite of what Shopify does. They report revenue when the order is placed, regardless of the ship date. Okay. So you want to be really careful in this example of ensuring that you're not making those types of issues or making those kind of mistakes. So now you know, so I'm giving you some insight here. Now you know that how Amazon recognizes revenue and how Shopify recognizes revenue. Now, companies that sell on both of those platforms might inadvertently have an issue with the way their revenue is booked because of those two different platforms with two different methods. We know that that's an issue. So if you're relying on the reports from each platform, again, if you're relying on the reports from each of those platforms to book the revenues from each day's sales, as you do, like we want to do daily sales, there's a lot of reasons why we want to do that, whether it's forecasting, budgeting, whatever it may be, you're actually mixing revenue recognition methods within the same company. Oh boy. So we know that this is where we got to be really careful. Again, each platform, you got to do some real digging and real research to understand when you have a client that grabs a new platform, let's say Square, for example, whatever it may be, any of these platforms, Amazon, there's WooCommerce. There's a whole bunch of them. How are they reporting and recognizing revenue? So it's not an issue who ship the same day, the orders taste. We know that, but it's a big deal when we've got this spacing out. It'd be especially bad if the company who ships later than the order is placed is doing well enough to be acquired. That's where our warning signs are. Again, we just want to make sure we understand the platforms for reporting as we're working with clients. And as they, by the way, jump onto new platforms without telling you, right? So that's just some of the things that we have to consider and think about. So again, as we're thinking about, and I like this, somebody's got the comment here, how do we reconcile this with the 1099-K, considering the IRS has a copy of that form? So tax accounting or financial accounting, this is a really great question, Nadine. So how do we reconcile this? The way I do a lot of IRS representation. I do a lot of audit support for clients. And not my clients, thankfully. Well, when they are, I don't represent them. That's a tip as well while we're here. But at the end of the day, what I always have is kind of like a book to tax worksheet. So financial accounting can be different than the tax accounting. Maybe they're on an accrual basis on their books, and maybe they're a cash basis or vice versa on the tax return, whatever that may be. My whole point that I always tell people, just like when the IRS comes in and does a cash T on revenue. So they're going to say, look at all these deposits that hit your bank account, and here's what your revenue, what's the difference? The only job that you have is to reconcile it. So your job is to say, hey, here's my 1099-K. This is what they reported for revenue. Here's my books and my revenue. What's the difference between the two? It's always going to be timing. It's going to be a timing difference likely. And all you have to do is be able to tie it out and reconcile it. And if you have a work paper to do that in the audits that I've been a part of, it's not been an issue. All the IRS wants you to prove is, how did this work, right? So just think about how that's working out at the end of the day. So so we have another question. I'm sorry. I love to just answer questions because I feel like, and maybe I'm wrong, that people pay attention better when their questions are answered. So maybe we can throw that one up there in a little bit. But so anyway, just to answer that question, that's kind of how I approach reconciliations and proving things to the IRS. And that's technically what they want. They just, hey, because they do focus on revenue. Well, here's why it doesn't tie out, because we've got some stuff that wasn't shipped till the following year, and we can tie that out and it's all good. So I think that we're good on that one. All right, let's move on. So again, just a recap of that. Understand the basis for each platform's numbers. So what are they doing? Are they accrual or are they cash? Shopify technically. So we know as Shopify is working through as soon as the order is placed, technically that's cash basis. And then with Amazon, technically accrual, but yet not, sort of at the same time. So we just need to make sure that we're matching the right revenue recognition method for the company. So we know if the order is placed, revenue is received, maybe that is deferred revenue. But we've got to, again, it's all about understanding the platform. I think that's really the point here. Okay. Here's another one for you. Another thing that happens, avoid closing draft orders by marking as paid. This is a staff training opportunity, folks. So avoid closing draft orders by marking as paid. So what happens if a user closes the draft orders using the marked as paid option, the product ships, but no payment is captured. So here's a great training opportunity for you. Maybe you're the bookkeeper, maybe you're doing the books, or you have a staff member that's doing that. As they say in their documentation, when you mark a draft order as paid, it does not trigger payment capture. So some of you may not have known that. So I know that we've seen situations where shops have lost thousands by not properly closing out the draft orders. So any of those orders that are marked as paid will show up in the manual payment section of your summary report. Again, the summary report has got to be watched to prevent the loss of those payments. We're not getting paid. So the marked as paid function in Shopify was designed to be used in situations when you're already received payment for the order. So maybe somebody prepaid, or maybe it's a big order they've prepaid or partially paid. So they've received the payment for the order, and that payment didn't go through the Shopify system. So maybe they mailed a check, maybe they wired the money into a bank account. So something like that. So somebody that's like just got paid by a wire transfer, or when you're importing previously paid orders into Shopify from some other platform, which is what people do, not all the time, but they do. You don't want to double charge the customer. So that's what that was meant to be for. Mark as paid. It wasn't meant to be used to close out a draft order unless one of the two conditions apply above, right? So we got a wire transfer, all those types of things, and money's already been received. So we want to think about that. Or we've imported previously paid orders. That's what that was meant for. But people will go in and they'll mark it as paid. The shipment is sent, but the money was never actually paid. And that's where the problem is. So you're going to want to review the manual payment section of the client summary report very carefully, okay? It shouldn't have anything in it unless you do, in fact, accept payments outside of the Shopify system, which I think is rare, but maybe in those situations with those businesses that are larger, selling major volume of product, that may be something that you have to take into consideration. So it's a question you need to ask your client. Are you accepting payments outside of this platform? If the answer is yes, well, buyer beware. Now you know what you need to do, okay? And so as you're doing it, so here's another little tip too, and this is, again, great training opportunity for your staff. So set up a tender type for those payments, like paid by check or paid by wire transfer. So I know that I do those payment methods just like right within a register, like when I used to do batch entry. I don't have to do that stuff anymore. But back then, if it was a wire payment, instead of a number, like a check number, I would put wire. Or if it was an ACH, ACH. If it was a paid by a manual check, the check number would go in there, whatever it may be, right? So this just allows us that way. You can match them. You can match up those payments to match up where the payment went. So now we're having some double checking, and we're making sure that we know that that's the way we have to treat those types of payments. Again, really, really important. Okay. All right, good. So again, great warnings for you all as we're going through here. So now here's another piece, properly converting draft orders to avoid the lost revenue. So we know when the order is paid for, or you set up a payment term, the draft order converts an order and it's listed on your orders page. Now, the key thing here is that the payment or the payment terms are added. This is where that happens, okay? So, but again, simply marking the draft order as marked as paid, it's going to bypass the actual payment collection. So big warning. The product's going to ship and your sales will be properly stated, but your money will not be collected. And do you want an angry client? Have them shipping out products without payments being received. That's just a recipe for disaster, as I would say. And you want to educate your clients. Again, we're doing advisory work. We're talking and having conversations with our clients. Let's educate them about that. And again, have that conversation about manual payments. Say, listen, you've got to notify me if you start accepting payments outside of the Shopify system. Simple. Again, reviewing those manual payments each month in that summary report. Again, should not have anything in it unless you do, in fact, accept those payments outside of Shopify. Okay. Again, just a recap, set up a tender type for those types of payments. So we know it was paid by a check or a wire, easy to find on the bank statement, those kind of things. So you can match them to where the payment went. This is where the clients cause chaos. And here's what we're trying to do, because we're going to talk about bookkeeping in a minute as we go through, because really at the end of the day, I need peace of mind in a world of chaos. E-commerce and e-commerce platforms cause chaos. I'm somebody who has stopped having my hair on fire. I don't know about you folks out there. I'd love to hear you put in the comments. Anybody else out there with their hair on fire when it comes to e-commerce platforms and the accounting? We stopped that madness and our lives are so much more peaceful. Going to stop the chaos. So here's another, again, this is just an audience check. This is Dawn Brolin just asking. So just to see, first of all, if you're listening, paying attention, Shopify and Amazon reports revenue using the same basis. Is that true or false? Just chuck it right in the comments. Is that true or false that both platforms use the same basis for revenue recognition? So if you're paying attention, love to see you throw that in there. Good. I love the exclamation mark, Laura. Awesome. Good. All right. Everyone was paying attention. I'm so proud of everybody. That's great. So just again, these are tips that you've got to be able to pass on to your staff. And that's especially if you're not the one doing it, making sure that they're paying attention and they're doing this correctly. All right, good. Thank you for participating too. Otherwise, I'm just talking to myself and I don't think anyone's listening. And I really want you to hear this one because it's so important. Okay, now influencer gifting. This one's really interesting. Don't use 100% discount to send out free merch to influencers. That's going to mess up your margins. Now, we want to clear out that inventory, right? We want to do that specifically when it comes to that influencer gifting or what we call $0 orders. Here, not just influencers, but how about family? So they're going to ship out some product to their family and they're just going to do 100% discount. That is going to jack up their margins. We do not want to do that. Okay, because common practices like these influencer giftings, which becoming much more popular, where orders are processed at a zero cost, usually by the user. So maybe, and it may not be the bookkeeper, by the way, folks. This is even training your clients. This is somebody who's managing orders and they're in the Shopify system doing their thing, and they're just trying to get the inventory out of there, and they know they're not charging the person, they're gifting it. Okay, but by doing that, it's gonna distort your financial figures in Shopify at the end of the day. And these types of orders, if they're not accounted for correctly, are going to skew the financial metrics like gross margins. And again, if we are going to be advisors to our clients, we want to make sure those gross margins are accurate. Okay. And there's a way to handle this so that the revenues and the metrics are not misstated by these $0 orders. So what you're going to do is instruct maybe your staff or the client's staff, whoever's managing Shopify, because somebody has to manage it. Maybe the business owner. Maybe they're just getting started. They're doing things on their own. They're trying to get their merchandise out there. They're doing a lot of $0 sales, if you will. We want to instruct them to use, again, a separate tender method, a payment type. We're going to call it influencer gifting or family and friends. And they may want to track it separate. This is going to actual influencers and this is going to actual family. I'd like to know how much they're giving away. I don't know about you. So instead, you have a tender method called, again, influencer gifting or friends and family. That's going to allow the order to be closed out at full cost. And that cost can be allocated to a marketing expense. So the journal entry comes over for those payment tender types. Maybe we make a journal entry once a month, however we want to do it, but we move those costs. They're not cost of goods sold, they're marketing expense. And I myself would have a separate account, a separate expense account, or maybe even a separate cost of goods sold account. So I keep it up there in the gross margin area. And can be just marketing costs, marketing COGS or something like that. However you like to look at your P&L and how you want to be able to explain it to your clients, they need to understand what's costing them to be able to give out this stuff. So if they see, they're giving out $5,000 worth of stuff to their family and friends, and they're not having great margins and they're not having a lot of profit, stop giving stuff to your family and friends. Now the influencers may be different. The influencers may actually help entice and get people to buy the product, right? So By doing a tender type called one of those couple of things, it's going to allow you to allocate to the marketing expense. In this particular way, if you do it this way, the margins and financial reports are correct rather than having them show as regular sales with no money collected. So this is how we're going to be able to do that. So the key here is to track these gifts separately and don't allow whoever that user is that's managing that Shopify account just manually adjust the regular discount field. Do not use the discount field for those influencer gift, family and friends, whatever it may be. And so those are just really important as we're working through so that we don't have that happen, right? So yeah, and so you're just can do just a simple journal entry, right? And so and so Julie, this is where we are, man. We're trying to give you the truth behind what really happens with Shopify because they don't care about the accounting. They care about the sales, right? And so that's why, this was an important topic for us to share with people so that we're doing the accounting absolutely properly. And that's what we're looking to do here. Again, track that influencer gifting, family and friends, whatever you want to call it, move it over to a marketing expense at the end of the month, and you're all set. And so now, again, we've got accurate financial statements, accurate information. Now, we move on to the conversation about sales tax, which I don't want to do sales tax. We'll talk about that in a little bit. Sales tax, no thank you. Too much going on there. And I believe you really have to know what you're doing when it comes to sales tax. And I just don't want to learn anything else. I love IRS representation. I love tax returns. I love those types of things, but sales tax is not my baby. Payroll tax and sales tax, no thank you. So obviously we know sales tax is complicated for most e-commerce sellers because they ship all over the country, maybe all over the world, very possibly, depending upon the product and what they want their reach to be. But it can also get more complicated if your Shopify sellers also use, here it comes, Meta, Facebook, Instagram. They're selling through Facebook, selling through Instagram, and TikTok. So sales tax gets really complicated. What are the issues that we find around here? Well, for those of your Shopify users who sell through Facebook, Instagram, or TikTok, which you all see this on your ads, you're scrolling through your stuff. You're like, oh, I want to buy this. I bought shirts through there. I've bought books through there, recommendations by various people. But they need to be especially careful when they're filing their sales tax returns to avoid overpayment. Why? Because those marketplace platforms are bound by what's called the Marketplace Facilitator Tax Law. They've got to withhold the sales tax and remit it on the seller's behalf. However, Shopify does not always call out the sales tax that was withheld by marketplaces in their standard reporting. So you may have it all running through Shopify, but not realizing that Facebook, Instagram, and TikTok are collecting and remitting sales tax on behalf of those sellers. That's terrifying. So if you didn't know that before, you know it now, and you heard it here. So you got to watch out for that. You have to manually back out of the sales tax figures provided by Shopify. So you got to back out those particular sales when you're calculating and remitting sales tax returns. Now, if our job wasn't already super complicated, it's gotten more complicated and it's only going to get more complicated. You know what that's called? Was it job security? They always say. I call it firm security. They're going to always need us because these types of things. And you may get a new client that's been, new client, they're coming to you. They've been using Shopify for a long, long time. Now, all of a sudden you're having conversations with them and they're like, yeah, we sell on Facebook and TikTok. Oh, who files your sales tax returns? Oh, I do them. That's the most terrifying answer. That the business owner is doing their own sales tax returns. Terrifying. Now you have an opportunity to be a hero because it's very highly likely if they are selling, especially at volume on those other platforms, you're going to get that money back. And so I think that that's really, really exciting opportunities for us. So we know we've got to look at that. Those marketplace platforms, we can be getting in trouble. So where do you find out where do you find this out in Shopify? So I'm going to walk you through what you have to do. Okay. So I'm going to try and take this slowly. I'm not a big, slow person, but we are giving you the slides. So you'll be able to, click on, there's some opportunity to click on some links in the presentation that you can go ahead and take advantage of. So what you need to do, you have to manually pull out the sales tax that Meta and TikTok, whatever, Instagram, whatever, withheld and remitted on your client's behalf. That's because you don't want to obviously overpay sales tax. You're going to create a custom report There's a URL that we can put, that Nelson can put it in the chat for you. Create a custom report using this URL. You're going to name the report. Then you're going to choose the template, taxes collected over time. Okay. So don't get all freaked out. We're going to have all this in here. Allison's going to drop it in there. It's also going to be in the presentation that you either have or will have. So what you're going to do, you're going to rename that report, taxes collected over time. Then you're going to choose your filters when the report pops up. Okay, so just going to walk through this. And this is all spelled out in my presentation. You should be able to have all this information. Okay. So you're going to set the time frame to your month end in question. So let's just say I used November earlier. Let's stick with November. So you're going to look for the month end date of, let's say, November 30th. Set the tax region to the state you want to see the sales tax due for. So again, multiple states. You may have to do this for a few times because you've got maybe 2 or 3 states you're dealing with, and you're going to have to set that state, the tax region, right? Then set the sales channel to is not, quote unquote, is not for the marketplace that is withholding the taxes. So is not Facebook, is not whatever. So if you want to see all the taxes you owe for platforms other than Facebook, then you put Facebook in there. So you want to say is not Shopify, is not TikTok, whatever. So you can filter through to get to back into that sales tax that you need to back out of the sales tax filing. The other thing is you can also click on the transaction detail report to see the breakdown. And that's going to show the sales tax handled by the channel, by channel. So you could sort it and do all those things. Also useful if there have also been platform coupons used in any of the transactions. Okay. But at the end of the day, the bottom line, and don't get freaked out. This is a recording. You're going to be fine. You're going to have this information so you can filter this report. If you have people on those other platforms, the Shopify summary reports can be deceiving. So be sure to understand where to look to ensure you don't overpay the sales tax liability. And again, it's something that you can do if you find a client that has been doing this for years. You may become their next best friend by being able to work through that for them. So again, make sure you're paying attention, get this filtered report set up for yourself so you can go in and make sure that your client is not overpaying on sales tax. Okay. Now here we're going to talk about understanding the Shopify deposits. All right. And I know this is a lot of information. You guys are all right. You're going to be fine. Recording, watch it 100 times, pause it, transcribe it, do what you need to do. Okay. So what is in Shopify deposits? It turns out a lot of things get lumped together. And that's something that I think we've always dealt with, whether it's, merchant deposits and we're trying to reconcile out a bank account. We got 3 days lumped into one and maybe one transaction that hit before 10 p.m. And now that's in this deposit, but everything from 10:01 after is in another deposit. And that's always been a challenge for us, I believe. And I know that back in the day when we didn't have tools to help us manage all of this, it was a nightmare. So now there's a lot of things that get lumped together. We have to know that so we can pull them out properly and allocate them to the right GL accounts. Now, this is again, we're talking through this as if you're doing this manually, but obviously we're going to give you the solution to help stop the madness and stop the chaos. But what is hidden in a typical Shopify deposit? Don't start crying looking at this list unless you feel like you need to. Understanding what is in these deposits. Several days worth of sales. We know that, right? Chargebacks. So we've got funds coming out. Sales tax collected. Sales tax withheld, right? Deducted from the payout because they've withheld the sales tax. Or if it's a sales tax collected in that case, like the Shopify, where the TikTok, where's the sales tax withheld? Net sales. Okay. For example, sales that don't include sales tax from Meta, TikTok, all those guys. Coupons applied. Shop cash promotion charges, shop cash payouts, less their fees, discount. I mean, hello, everybody. Put in the comments if you think this is fun. Like, give me a break here, right? This is all the stuff we have to pay attention to. You're going to have to get really good at pulling the right reports. You understand where these numbers come from and what things are included in those deposits and that they're netted together by Shopify. And this is difficult to do manually. I find it to be extremely frustrating. Of course, the best way, in my opinion, than what we've done at our firm is to get it all straightened out by using an automation platform, and we choose Bookkeep. Why do we choose Bookkeep? Because it does it correctly. I'm really into having my clients' books be accurate. And I actually like to have my clients' books accurate without my intervention. I like the platform to do the work for me so that because we do the bank feeds thing, but you got to be careful. A lot of people are out there right now booking e-commerce as net sales. They're just saying sales, sales, and they're just going out there and they're accepting it as sales. And they make a rule and they never even see it after they make the rule once. And really, at the end of the day, it's not correct. It's flat out not correct. Okay. So we think about how that works. And there's obviously methods and ways we've had to do that in the past. I like the comment. Some clients want to reconcile it using a Shopify clearing account on a weekly basis. Boy, that thing better come to zero, and it better make sure that the breakdown between sales and sales tax and refunds and chargebacks and all this stuff is correct. And we've got to make sure it's correct. And sometimes, again, Megan, I think it's about education to the clients, helping educate them the things that they don't understand. And they're probably not going to understand it. But what I pretty much just say to my clients, hey, you want to overpay in sales tax? You go for it, man. You got this. You don't need me. What do you need me for? Or if you'd like your stuff to be correct and not pay out more money to the government that you don't want to pay in the first place, maybe we can shift the way you're thinking and the way you're doing things. And so I'm just take a realistic approach with my clients and help them understand what's going on. So just to see what you guys are up to, here's a little check-in. How many different things can be netted into your Shopify payout figure? This is a fun one. So is it 1, 2, or 3? Like, I think you guys have been paying attention, which I'm thankful for, because I think these are some of the things that we've got to, and this is the hardest part, Megan, I agree with you 100%, is to help the clients understand the impact of the decisions that they are making. All right. At the end of the day, that's the deal. So yes, good. Everybody's with me. There's so many things that, you know what? I don't know about you guys. I don't make a lot of money breaking down deposits. If anyone makes a lot of money breaking down deposits, and when I say a lot of money, like $500 an hour doing that, $250 an hour doing that, why are you charging by the hour? That's a whole nother webinar. But at the end of the day, I'm finding myself being able to be productive, efficient, and accurate for my clients because I'm choosing to use tools that are working to help me get the accounting correct. All right. Now, I'm going to give you some bonus tips, some things you may have not known before. Number 1, do not ever delete items in Shopify. Do not delete those items. And why do I say that? Because at the end of the day, there's 2 places you don't delete. Never delete an item that has already been sold, ever. If it has been sold once, do not delete it. It's going to mess up your cost of goods sold and it will delete the history for that item. So don't do that. Teach your clients, and teach your staff. Because typically when people have a Shopify, I don't know if anybody, if you want to put in the chat here, are you managing? I'm curious if you're managing the Shopify systems or any e-commerce platform. Are you managing those platforms for your clients? Or are they, for the most part, managing that part of it and you're doing the accounting side? If you don't mind, put in the chat. That's great. If you don't. But you've heard it here. Don't delete an item that's already been sold, ever. The other one, do not delete an item from an unfulfilled order. So what's going to happen there? Shopify will remove the item, but it will still charge the customer, right? Yep, Tina, good. So, there's my girl, Tina. So yeah, most of you guys are doing the accounting side, but sometimes depends on the client. Okay, so then you folks who have the accounting side, that you're doing the accounting side, is critical that you have a conversation with your clients to make sure if they're using Shopify that they're not doing this. And you've got to investigate the other platforms. And there's no better educator around how those platforms work than Bookkeep. And that's what I love about it, is they are a great added support system to my team. I don't have to hire anybody. I can have them, hey, listen, what do I have to watch out for in this particular platform? What do I have to watch out for in this particular platform? Because guess what, folks? Those platforms don't know. They tell you that you can't do certain things, and that's not necessarily the truth. They just don't know about it. You also, like I said, do not want to delete an item from an unfulfilled order. You want to close the original order, then press a return or exchange instead. So that's a really, really important tip. Do not do that, okay? Do not delete those items from unfulfilled orders, okay? Really important. So as we're I want to recap a little bit here. I want to talk a couple more things I want to talk about. But we know that e-commerce can be challenging. We need to choose the right revenue recognition method for your client. Either you're going to do that or you're going to automate the system. You want to avoid mixing revenue recognition methods when you've got Amazon and Shopify because they do it different. We want to ensure the product is not shipped without the payment being collected. Super important, folks. Your people are going to be angry. You don't want angry clients. I hate those phone calls. They're not fun for anybody. They're not fun for the client. And they're certainly not fun for my team. Okay. Protecting margins when the influencer gifting or family and friends or whatever you're doing there, make sure you're setting up that payment method and we're moving that money into a marketing expense so that we can track that and we don't mess with our margins within Shopify. We don't want to overpay sales tax, so make sure we know what's within those platforms, okay? Make sure we know what we're looking for, again, or automate it, then you don't even have to deal with it. That's my choice, right? Understanding and unpacking Shopify deposits. You know there's a lot going on in there. Make sure you understand that, okay? Make sure you understand what's in those deposits. And then remember those two situations to never delete items from Shopify. Again, and make sure that we are, in fact, as much as we can, automating, but we've got to be educating our clients because they're the ones we have to be in charge for. So before I got the technology, which I, again, chose Bookkeep, and I'm not selling Bookkeep to you. I'm just telling you that Powerful Accounting runs efficiently, accurately, so that we don't have to do any of this stuff manually. We also increase the value of our work. And at the end of the day, for us, I think we probably save at least 20 plus hours per month for each of those clients that are on Bookkeep, either whether it's, again, Square, Shopify, Amazon, WooCommerce, all the things, because we're not doing it. We're getting reports from Bookkeep to tell us if things are flowing smoothly, but we're not doing it. And really, at the end of the day, it's the best thing is that the daily sales journal and the daily payment journals are automatic. That stuff is happening automatically. I'm not managing that. Okay. And they break everything down into the right general ledger accounts. You map the transaction types when you set up the account. It's all done on, and you can set it up however you want, but those transactions are going to come through accurately. It's going to recognize the revenue when the revenue occurs, and it's going to post the deposits when the cash is actually fulfilled into the bank account, and it's going to do it correct. It's a set it for me. I don't know if you guys ever had one of these, a set it and forget it. I remember distinctly my husband, I loved that. Put the chicken in there and you put it on a thing and you push the button, you set it, and you forget it. And then when it's done, it's done. It takes care of it for me. I don't have to think about it. I'm not a really great cook, so I need those kind of tools in my household, right? So allows you to spend your time more on the advising of the clients than handling the transactions. I tell Nicole in my office, the minute you start pounding on a keyboard with the transaction, stop, let's have a call. Because if there's something we can automate to make it less human interactive on the entry side, we can be using our brains on the analytical side and having those conversations with our clients. And that's what's important to us. Okay. So set it and forget it. I don't want to be having Nicole wading through the selling and payment platform and trying to find booking those entries, hoping she did the entry right. Because I don't, not because she's not a good bookkeeper, but because at the end of the day, if she's not doing something right, that's going to cost me. Right. So really, really important. So how does automation increase value? Because some people don't understand this. They'll say, well, it doesn't take me long, so I don't really charge for much. Oh, no. Typing is a time waste most of the time. Numbers need to be at your fingertips on a daily basis. Somebody calls, I want to know what's happening. Your pricing should reflect the value you create. If you discover a technology that solves their problem and absolutely does it right, you think the client isn't going to be unhappy about that? So instead of me having to work 30 hours on their bookkeeping a month, I work 10. You think the client cares if it's right and that we're doing things? And now we're saying, hey, you know what? We got your books all done by the 5th of the month. We're good to go. Let's jump on a call. Let's jump on a call the second week of every month. And let's just go through your numbers. That is value, folks. That is value. And we keep on keeping on with the clients and helping them improve their processes. But I will tell you, because some of you are asking in the comment section, Bookkeep will automatically post sales to QuickBooks Zero, Zoho Books, or Sage Intact directly from the data sources. So directly from Shopify, Amazon, WooCommerce, PayPal, blah. There's a zillion of them. It will also help you handle sales tax through Avalara, a tool called Davo. So you're not having to file those sales tax returns. Bookkeep's breaking down the deposits. You're breaking down all the sales, breaking it all down correctly. And it says, hey, Davo, Now I'm passing the ball to you. Now you go and file these sales tax returns. You remit the sales tax. You make sure the sales tax is right. And you've just backed yourself out of dealing with sales tax because it is a whole other animal. But that doesn't mean you can't service your clients with it. You can, but make sure you have the tools in place to support it. And that's what we do, okay, at the end for Powerful Accounting. So this has been a lot of information. I know I just fire hosed you. I went as slow as I possibly could, but yet fast so I could get it within the right time frame. But Bookkeep has an incredible free newsletter. You've got to sign up for it. Adventures and E-commerce Accounting newsletter. Okay. What you don't know can hurt you, by the way. And Bookkeep will do the research for you. They will inform you. You will learn and learn and learn from Bookkeep. And so I really, really encourage you to sign up for that newsletter so that you can stay ahead of the game. And I want to say thank you all for attending. I want you to now take action. Look at your client list. Who are on these e-commerce platforms? And sometimes I know for us, Nicole may be reconciling a bank statement. She all of a sudden notices somebody set up a Square account, or they notice they set up some other kind of account. And now we're like, okay, stop. Let's go to Bookkeep. Automatically open that up. Let's get it connected. The nice thing about it as well, and I just always like to mention this, but what Bookkeep has done for us, we do a lot of non-filer taxes. People who have not filed returns in 6 years. And you know what you have to do? You have to recreate their books or create their books. They never even really had them. They hand you all their bank statements and you look at them and you see that they had Shopify or you saw they had Square. Well, Bookkeep, as long as that Square, Shopify, WooCommerce, doesn't matter, PayPal account was started, they can go back and recreate those transactions from years before. And that has been certainly helpful for us in ensuring that revenue is accurate. So when we prepare a tax return, it is correct. And so when we're thinking about those types of things, that's where Bookkeep just does things that no one else does. And so we appreciate that because we really, really want to make sure that we are getting things done accurately and timely. And we're just making things a well-oiled machine so that, to be honest with you, I can be on my boat and Nicole can be going to wrestling matches, watching her son wrestle, or whatever the case may be. Whatever your passion is outside of your office, let Bookkeep help you automate things so you can either work more if you want, that's on you, up to you, or you can work less, provide bigger and better value by utilizing Bookkeep. So I hope you guys learned something today. There's so many things, so many more things we could talk about. But at the end of the day, here we are. E-commerce is not going away. It's only going to grow. Make sure you're prepared with the tools. I'm going to turn it right back over to Joel. So thank you everybody for being here. It was I had a great time. I hope you did too.
Thank you so much, Dawn, for this wonderful webinar. And thank you to all of our live attendees. And enjoy the rest of your day.
Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.